Hello, good weekend. It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of the US markets for the weekend and obviously trading commencing Monday, the 25th of January 2016. Okay, this is a video book brought to you courtesy of, as always, CFDs.com. Be sure to visit the website www.cfds.com for your trading needs and certainly explore the actual products and services available. They do have an offer on at present for any additional funds that are placed into the account. We'll give you an extra 25% for all new trading accounts. 25% cash bonus offer. Alternatively, you can visit the educational site www.cfds.com to certainly learn more. Okay, in terms of the markets themselves and basically where they closed, let's just do a little recap and try and work out exactly where we stand from a fundamental, obviously, and a technical perspective. Okay, so the FTSE, obviously a stellar performance there, almost 2%. Basically, all European markets up 2%. The French CAC up by 3%. We had a stellar rally overnight in the Nikkei, up by almost 6%. A Hang Seng and the Shanghai 1% and 3% respectively. US markets obviously finished up quite handsomely. The S&P up 2%, the Nasdaq up almost 3%, the Dow Jones up 1.3%. So let's see exactly where we stand. Okay, so first of all, as always, Shanghai. Now this is a cause for concern for me, given the fact that global markets have rallied quite substantially. The Shanghai did not rally in sync. Now again, that's a real cause for concern for me. The fact that we didn't get a more of a comprehensive bounce, possibly up to gap fill up here. Again, this is a worry, okay? China concerns still remain at the forefront given that feeble bounce, okay? The Nikkei itself, yes, we've bounced, but what we're actually doing here is technically testing or retesting the previous support, given the fact that we closed the gap there, the market broke right below it, and we're retesting the actual breakout, okay? So again, it's not exactly overtly bullish. Again, bear that in mind. Obviously, we close a gap there. We have a gap below as well, and then there's another gap below. So, from my perspective, going into the trading session for Monday, I would certainly exercise caution. That's basically my stance at present. If we connect the dots together as well, you'll see that we have the lower lows, lower highs, and the market is certainly potentially into resistance. So, expect some weakness based on the Asian shares alone, okay? Right, so that's an important factor, okay? Now, in terms of economic data, let's just go over Friday's economic data. Before we do that, actually, just bear in mind the reason why we had the rally was mainly due to central banks. If you bring up the chart of the yen, and you'll see that we had a fall. If I bring up the chart, the USD, bring up the chart of yen first, bring up a daily chart, you can see the yen, certain topping, potential topping tail, talk of additional easing, and that obviously helped US markets to move higher, okay? Certainly helped US markets to move higher. So it's all about that easing, okay? It's all about that QE, and we are retesting that breakout level as well, and that should be interesting as to which way this market were to go. As you can see, the yen starts to fall. USD JPY certainly rises, and that obviously sends the QE trade into full swing. As you can see here, bottoming tail, and we start to rally. Now, in terms of zooming in, looking at your smaller time frames, let's just look at the 4-hour chart on the USD JPY, and certainly is coming into some sort of turbulence, this level here. You can see that we have a resistance zone. Okay, if we obviously break above that, then you have the 200 MA, and if you break above that, then you do have the actual previous support equals resistance. Let me just get a better line so we can see this more clearly. Okay, here we go, 200 MA. Okay, so very, very important as to the price action and movement here. Bear with me. Let's bring up the RSI as well, just for future purposes, and you can see the RSI certainly coming into oversold territory. So therefore, looking for a potential pullback on the actual chart of USD JPY. And for those that know, if you overlap a chart of USD JPY onto the S&P 500, there's almost 100% correlation because of the QE trade. Okay, so bear that in mind. So very, very important here. Let me just save this for future reference. Okay, right. Okay, so USD JPY into resistance, yen potentially into support, and therefore from that perspective we would then conclude that US markets certainly are facing some turbulence. Okay, this is very, very important to understand. Let us go and zoom in into a 4-hour chart, see if we can see some area of support, and yes we can. We certainly are into a potential support zone. Zooming into a 60-minute chart. Just get this out of the way in terms of potential support. So we are looking for a potential bounce at this juncture, okay? So a small bounce here seen. Now overall, looking at the larger scheme of things, there certainly is an argument for a potential HNS formation. Once we make this right shoulder move lower, then you do have multiple unfilled gaps that need to be closed below, okay? So certainly an argument here for US markets to have made a solid base and looking for a potential thrust higher, especially with regards to the BOJ and talk of further easing. Now, again, over the weekend, I think I think over the weekend, the article that will be doing the rounds and I think everybody should be focusing on is pressure mounts on reluctant BOJ to ease monetary policy further. With oil below $30, a strengthening yen and markets in flux, the Bank of Japan's reluctance to ease monetary policy further will face one of its sternest challenges at next week's policy meeting. Okay, so everybody certainly seems to be short squeezing going into that meeting. But again, the uncertainty as well. Not only does the global economy appear to be struggling, the labour force at home seems equally unconvinced by the BOJ's prognosis of reinflating Japan, car workers, etc., and the pay rise. All this has conspired to put the BOJ's effort to end 20 years of an on-off deflation in Japan, because we all know the whole fight is about deflation, and that's why the ECB has reconsidered now as well. So they have now officially stated they are going to reconsider for the March meeting, which I'll discuss again, because it's all about the bond market. The bond market is now potentially into resistance, and I'll explain what the ramifications of that will be. Okay, but for now, in terms of US markets, the focus will be on the BOJ, the USD, JPY, and the yen. Okay, so those of you who are trading this week, all eyes will be on the yen and the USD, JPY. And the USD, JPY is now coming into support, or should we say resistance. The yen is coming into support. And just remember that theme when I go into US markets and look at the analysis there. Okay, now in terms of the economic data, let's just discuss. Okay, so Friday you had the Chicago Fed missing expectations. Okay, you had market manufacturing slightly better than expected. CB leading indicator, again, that missed expectations. Existing home sales actually better than expected. So mixed set of data, but the home sales certainly was an overall net positive. Okay, right, let's go into the technical side of things now. Okay, first of all, we need to bring up the chart of the Nasdaq. Bring up the weekly chart. You can see a potential bottoming tail, but having said that, it's still an inside bar. The previous week's bar was red, and we basically consolidated within that. There is a very high probability that we could go back down and retest 300 and 3700, so we certainly can't take that out of the equation. Daily chart, still have lower lows, lower highs. Ever since we closed this gap down here, we've obviously bounced, and whether or not this bounce has legs, whether it's a dead cat bounce, we shall see next week. Again, all eyes on BOJ easing and the move there. 60-minute chart on the Nasdaq. Be aware, we do have an inverted head and shoulders formation. The inverted head and shoulders target is, let's just bring this up, 4,200 minus 4,000 equals 4,400. So that's the potential target on the upside, folks. Okay, 4,400 on the upside. Now you do have an unfilled gap here that potentially is on the verge of closing, which is 4,270. Observe that. Keep a keen eye out for that. And that's the actual gap fill resistance. Now, the only concern that I have with regards to the Nasdaq is this. Okay, let me just bring up the chart of semiconductors. It's an inside bar on the weekly chart again. Okay, on the semicons. Daily chart, you've put in a doji and potential exhaustion. And the main key is the unfilled gap here. Okay, now you do have multiple unfilled gaps above as well. So let me just bring them into the equation in terms of semicons. So in terms of the market reversing and obviously moving higher, that certainly is something to consider. If I just put in my gaps as well, just for future reference. Okay, here we go. These are all potential gaps, right? Now, the 60-minute chart, you can see that we are coming into gap fill resistance. So the market still is making lower lows, lower highs. Although, yes, we have made a base here, there is a high probability of retesting and moving down again, especially given the fact that the yen is now into support. Bear that in mind, folks, okay? It's all about BOJ, it's all about QE, and obviously the European ECB QE is certainly having an effect as well. Okay, if you have an unfilled gap below, intraday, the market's certainly showing some resistance, no real thrust higher, and therefore exhaustion, no higher high, and therefore looking for a potential reversal, okay, on the semicons, and that's obviously bearish for the Nasdaq. The biotechs is on the weekly chart. Yes, we have potentially put in a bottoming tail, and that certainly needs to be respected. The daily chart certainly has broke out after the bullish engulfing candle, and it certainly is showing some promise here. The 60-minute chart is obviously into that resistance zone, which is gap fill, and that certainly will be the resistance zone for now, and that will certainly keep a cap on the Nasdaq to a large extent, okay? Especially given the fact that the yen obviously is now into support. Again, that's something to consider. Okay, so the Nasdaq certainly looks exhausted, and the potential high, pivot high, will be that gap fill resistance, okay? Bringing up the Dow Transports on the weekly chart, you can see we've put in a potential bottoming tail doji, so again, take that into consideration. A bottoming tail and 3-bar reversal, but is coming into exhaustion. The 3-bar reversal more or less is over, and you don't be surprised if you are going to see another day down before we potentially see another leg up. Now, there is this pattern that's in play, and bear in mind this pattern certainly needs to be respected to a large extent. You have this left shoulder, obviously the head is going in. Now we're looking to potentially thrust lower for the right shoulder. So all eyes on the right shoulder from my perspective, okay? All eyes on the right shoulder on the Dow Transports, okay? Looking at the Dow Jones and the daily on the weekly chart, you can see that we've obviously held that 200 MA. We've put in a bottoming tail doji, so again, that's a promising sign. Daily chart, yes, we've put in a bottoming tail and we've thrusted higher. We've negated that red candle, and certainly is looking promising for a potential pivot low bottom. Again, on the 60-minute chart, you have the inverted head and shoulders formation on the expectations of further easing, QE, etc. But bear that in mind that any sell-off or further sell-off in China, that pattern is certainly out of the equation. Okay, so but good volume in terms of the buy side. But again, all eyes on this inverted head and shoulders formation, and that certainly needs to be respected on the 60-minute chart. The 10-minute chart certainly is showing exhaustion now. Looking for a potential pullback given the fact that we did not put a higher high into the market. So again, that certainly is weakness from my perspective. Any Chinese weakness going into Sunday night, lights out for the Dow Jones, okay? And obviously that will send the Dow Transports lower as well, and certainly will indicate weakness. But for now, you are looking at potential gap fill. So early doors in terms of Monday's trading is weakness. That's my interpretation, okay? Right, now moving on to the S&P 500. Let's just observe this. Before we do, let's always look at the actual Russell 3000, the Russell 2000. Looking at the Russell 3000, basically we've recaptured that previous resistance, previous support equals resistance on the daily chart. So certainly looking exhausted now. Obviously you have this unfilled gap resistance there as well. So again, looking exhausted. 10-minute chart, you can see that we failed basically to make a new high. We even failed to close that gap above, even with the Nikkei up almost 1,000 points. So again, it's a cause for concern. Okay, the rally itself has obviously occurred, but very feeble. Okay, very feeble. I did expect that gap to close with such a bullish backdrop with the BOJ and the ECB easing, and it certainly seems that central banks are losing their potency. Okay, now the Russell 2000, as always, let's bring up the Russell 2000. Here we go. This is the IWN, by the way, not the IWM. Here we go, IWM. Okay, so again, IWM into gap fills for resistance. Very similar. 10-minute chart certainly is showing exhaustion, no higher highs. Unfilled gap below, given the yen in support. We are looking to potentially close that first. Okay, now going over to the S&P 500, let's go to the weekly chart first. You can see, yes, we've put in a bottoming tail. Like I explained in my videos, you are looking at a potential pivot low. And that was obviously due to the yen and obviously USD JPY. And once we got news with regards to the BOJ, off we went to the races. The daily chart has left an unfilled gap behind, so again, that's certainly cause for concern. 60-minute chart has an inverted head and shoulders formation, so one must respect that, and there is a target of 1975. But given the fact that the S&P 500, well, the Russell, should I say, is showing weakness, we are looking at further weakness initially. Potential consolidation above the neckline before we continue the thrust higher. 10-minute chart, again, exhaustion, no higher highs, certainly a cause for concern. You have an unfilled gap that needs to be closed, and all eyes will be on there, okay, in terms of the US markets, okay? So I think I've explained that you are looking for initial weakness from the outset. Bring up the Wilshire 5000 as well. This is an important chart, as always. I've explained this on several occasions. You've held that 200 MA. We held that perfectly on the weekly chart, but bottoming tail wick. Daily chart, bottoming tail, obviously we thrusted higher. We've recaptured that support zone, so again, all eyes on that in terms of next trading week for next week. Now, in terms of a potential bearish, or should we say bullish pattern, let's just see if we can connect these pivot highs together. Obviously we've broken out of this downtrend, so for now you do have this pattern here, and you are looking for a potential initial weakness, so therefore left shoulder, you're looking for a potential right shoulder consolidation before we start to move higher. So again, everything is indicating higher, very bullish in terms of US markets, but from the outset, from the interim, it will all depend on the Chinese markets. Now Chinese markets are weak, so don't be surprised to see a potential weakness initially on US markets, which may well be bought for an inverted head and shoulders. But if the Chinese markets start to slide quite substantially again, then all trades are off, and we are going to potentially revisit that double bottom on the US markets. Okay, looking at the actual VIX itself, again the VIX is coming into gap fill support. The HNS target and the VIX is the pivot high is 19.7. You have 17.28. Basically you're looking at a 2.5% move, so you're looking at 15, potentially a 200 MA being touched on the downside. But for now, you are coming into gap fill support, so therefore look for a potential risk off tone in US markets. Okay. In terms of oil, the oil chart is obviously very important, very detrimental in terms of the next potential move on the market. So again, let's just bring up a chart of oil. No real trend line isn't really being respected here. So again, for now, it's still lower lows and lower highs. One needs to understand that. And the bias certainly does remain bearish for now, unless otherwise stated. Now, oil is obviously into resistance, so therefore you are looking at potential weakness on the US markets as well, because the markets, equity markets, have become so sensitive to oil. Okay, so bear that in mind. That's certainly some food for thought. When oil is into resistance, then you are looking at the equity markets into resistance as well. Okay, so that certainly is a conundrum, and that will certainly need to be taken into consideration as well. Okay, now the price of gold is still consolidating here. Now, obviously, if BOJ and the ECB have started their new round of QE, then don't be so. Obviously, gold has to go higher, so you are looking at 11.30 on gold. In terms of the price of copper, very upset. Well, not upset, but very disappointed with copper. I did expect with the BOJ and ECB obviously sounding on the easing pattern, I certainly did expect the price of copper to potentially move higher to 200 MA, and it hasn't. So certainly a cause for concern, given the fact that we have concerns over China, etc. And given the fact that you are seeing weakness in copper, it confirms the weakness early on for global markets going into Monday's trading. Okay, commodity wisdom tree, commodity ETF, we are retesting the previous support equals resistance, so not exactly an overtly bullish move as such there. Okay, right. Let's have a look at the other factors that we need to look at. The financials. Okay, weekly financials certainly held at 200 MA, so certainly a promising sign there. Daily chart, we did close a gap, so again potential resistance initially earlier on. The 60-minute chart certainly has not made a lower low yet, so certainly is showing early signs of promise, looking to potentially build a base before we start to move higher, so certainly a good sign. Okay, the energy ETF weekly chart puts a nice bottoming tail. Certainly a good confirmation of a reversal now, move higher. Daily chart certainly a thruster. Any move higher will be testing this previous support equals resistance. So certainly commodity ETFs are finding love once again. Now we've closed the gap, so like I said, initial gap fill resistance, and therefore you are looking at turbulence for the US markets early on. Okay, again, that's dependent upon the price of oil. If oil can continue to move higher, then you will see these ETFs move higher. The energy ETF. If not, oil is into resistance, energy ETFs into resistance, so you are looking at a pullback earlier on. Okay. In terms of retail now for the S&P, again, bottoming tail on the retail ETF, certainly a good sign. Daily chart has attempted a thrust back, but again, bear in mind that previous support equals resistance, so you will find some turbulence there. Now, the 60-minute chart, obviously, we've closed a gap. We are holding that resistance zone, but again, can you see the same type of pattern everywhere? We are looking at initial weakness, and then obviously looking for a potential inverted head and shoulders formation being built, and then obviously off we go to the races. So again, certainly food for thought. Home builders, obviously the housing data on Friday certainly helped. The bottoming tail was put in on the weekly chart. Okay, obviously further easing abroad, etc. will certainly help, and that certainly has put a potential base there. Consumer staples again has held that support. It was showing promise even prior to that, so certainly a good sign. Okay, certainly a good sign. Utilities, you got industrial, consumer discretionary as well. Metals and mining, again, still languishing, still weak, still not exactly very promising. Okay, looking at the daily chart, as you can see here, doji very, very weak. Commodities certainly still remain exceptionally weak, and really is the weakest link in this market. Now, that will depend on the price of the dollar. And again, let me just bring up the dollar chart. I think this is quite crucial, quite important. You have obviously a bullish channel that's obviously in play, but we are looking at a potential breakdown here. Now, this is a HNS formation in the dollar index, which I've already sent out in terms of my analysis. And a top in the dollar index obviously indicates, given the fact that everybody else has now started the QE game, the US markets are basically, well, the Fed has no other choice really in terms of talking its rate hike cycle down as well, given the fact that China obviously devaluing its currency. The ECB certainly talked its currency down with further QE. The BOJ talked its currency down in terms of QE because obviously in retaliation to the yuan devaluation, and now the US markets certainly have been left with the game of musical chairs really. I mean, they're the only ones without a seat, so again they will have to play the QE game as well, especially with the BOJ stimulus talk this week. Okay, so again, the US dollar is either going to break out higher and continue its thrust higher at the expense of all the other currencies around the world devaluing their currencies, and the dollar, obviously it's a zero-sum game, so the dollar has to lose in the sense that it moves higher and it feels the pain. Okay, and obviously that will continue to hurt commodities because all commodities are priced in dollars, and if there's no demand and the price is going higher, then obviously we all know what will happen to commodities. There's only a one-way move, and that's lower. Okay, so again, that's certainly food for thought. Okay, certainly food for thought in terms of the US dollar going into Monday's trading. So I think that's a wrap, folks, in terms of trading the US markets. Again, what I'm expecting is early weakness. If we do start to thrust higher in Chinese and in the Asian markets, then you are aware there's a gap fill at 1920, and that should certainly hold. You have an unfilled gap below at 1970, and that should certainly hold between those two zones. Be aware that you have an inverted head and shoulders formation in the 60-minute chart. Target remain 1975. Interim resistance levels are 1935, 1947, and then obviously previous support equals resistance at 1994. Again, if the obviously Chinese markets start to sell, Asian markets start to sell, then you are looking at potentially closing the gap below at 1870 and potentially even revisiting the pivot low at 1820. Given the fact that you have BOJ and ECB talking stimulus, it's very hard to see 1820 again. So overall, looking in the long-term picture, you are looking at potentially higher prices with that 1975 target being filled. Again, it depends on oil. Again, it depends on China. We can only prepare, folks, and then we have to react. Okay, so I wish you all a good trading week. Be sure to visit cfds.com for your trading needs. Goodbye now.